All right, well, May was certainly a rough month for all stocks, but perhaps no group was hit more than the small caps. They fell 8% on average, some much more. But your next guest has been bullish on the small guys and remains so. Joining us once again is Joel Shulman. He is founder and managing director of EntrepreneurShares. Joel, welcome. Good to see you again.
Good morning.
Small caps were great until they weren't, but you're sticking by them.
Right.
Why is it worth our viewers' money still?
Well, I mean, there's $1 trillion in pending deals right now year to date. Compared to last year, it was at this time it's about $234 billion. So we're running 4 times ahead. If you look at proposed deals, it's now around $500+ billion compared to about $130 billion last year. So M&A, in our statistics have shown that generally investors get about 2% additional risk-adjusted alpha based on M&A transactions alone. So I still think, based on the pullback, that there's opportunity. Interest rates are still low. People are looking for opportunity. The stock prices right now are a little cheaper.
So we talked, Joel, about the Powell put, the idea that maybe the Fed has the back of the equity investors out there. You believe that there may be a deal put, that M&A could have the back of small caps.
I absolutely believe this. I mean, last year we had $4 trillion. We're running way ahead of last year. If you look at terminated deals, which I think is a key statistic, terminated deals are about $60 billion, which is almost nothing compared to everything else. So I think a lot of investors need to look at those stocks that have great growth opportunities, that have pulled back a lot in May, and right now they're probably being perceived.
I was going to say, because that's the hard part, is unless you got somebody breaking the law, whispering in your ear, you don't know who's going to get bought. So how do you kind of whittle out the better prospects?
Well, this is a great question. I mean, one of the reasons why we like publicly traded entrepreneurial companies, they have concentrated ownership. So if someone's going to do a deal, they go to 1 or 2 parties, they can do the deal quickly. And this is what we found to be true over the years. So if you look at companies that pull back, strong growth opportunity, good balance sheets that enable companies to come in and take advantage of the borrowing capabilities, and concentrated ownership. Moreover, if you're looking at a senior person who's maybe been there a number of years and maybe
getting up there in age.
Yeah.
Because, it's funny, Fiat, Chrysler, Renault, their deals, we learned the problem with lots of people getting involved, right? No one can make a deal. So you're saying, aside from the normal financial metrics, the Warren Buffett stuff, look at who owns the company, primarily maybe how old they are. You're 59, you've been there 20 years. Maybe it's time to buy that yacht by selling out.
Well, I mean, we've seen this case in the last few years with, for example, Starbucks. The CEO has retired after a certain period and started to spend more. So you'll see that. You'll see consumption going up. Another key statistic that we like to look at is we look at compensation relative to stock ownership. They start selling off some of the stock. They're signaling to the marketplace that maybe it's time to start scaling back and doing other things. So you'll see a variety of these factors: concentrated ownership, selling of the stock, increase in cash compensation, bonuses. You'll see maybe they're signaling to the marketplace. So these are.
Do you think the market overreacted on a macro level in May?
I think yes, I do. And I think there's a buying opportunity right now. I don't think it's a crazy screaming buy, but I think there's generally speaking, it's a buy opportunity.
But I like that. Really good real world advice. Not only look at the financial metrics if you want to own a stock, but look at who owns it, maybe how old they are, the concentrated ownership, smart stuff. But I wouldn't expect anything less, Joel. Thank you very much.
Thank you.